First, we have the rental property. Rental property are the property that you buy. The depreciation property is the property that you buy and it has a good growth. The good thing about commercial property is you buy it and you can, if you're expert at it, you can sell it at a good price. Hi everybody, today we're going to talk about different investment in real estate. We have almost 8 kind of real estate investment in Canada and US. We want to talk about some of them in this video and probably we talk about the rest in the videos after. First, we have the rental property. Rental property are the property that you buy and you rent it out and you make good money out of it. But sometimes the property which are good for rental, they're not good for depreciation. The depreciation property is the property that you buy and it has a good growth. It means that, for example, you buy property this year for $500,000 in Toronto, and in 5-6 years you sell it for, let's say, $1 million or over $1 million. You don't get that much growth in actually rental if your property is good for depreciation. So you have to distinguish between the property that you buy for rental and the property that you buy for depreciation. The other thing is investing in commercial property. Commercial property are the property that you buy and you have to be expert at it and you have to check the net operating income, you have to check the cap rate, and you have to check a lot of things in commercial property. The good thing about commercial property is you buy it and you can, if you're expert at it, you can sell it at a good price. We can show you a lot of examples of that in probably different videos after, but me myself, I'm very much interested in commercial property because like beside the fact that it gives you a very good rental, it gives you a very good return after. The other thing is Airbnb. In Airbnb's property, you get a very good return on rentals. It can be a short term or it can be a long term. Long-term property for Airbnb usually is a lot different than the short-term Airbnb because in short-term Airbnb properties, you need to actually get approval from Airbnb department, and it has a lot of let's say regulation that you have to follow. But on long term, they have different regulation that you can probably have it for 8 months, but in short term, you can just Airbnb the property for just 6 months. The other investment in real estate is Bare Concept. A lot of people are using Bare Concept and they would have a lot of property in short period of time. The Bare Concept is the concept that tells you you can buy a property, you would pay the down payment, and after you can refinance the property, take out the down payment, and you can buy the other property. And with Bare Concept, there are a lot of people who would have a lot of property after a short period of time. The other concept that people use in real estate to make money is fix and flip. Fix and flip is when you buy a property, you renovate it, and you actually sell the property after. In fix and flip property, you should follow certain criteria. Like you can't just go out and buy property and sell it after. You have to check before you buy it that it's a good property for fix and flip, how much is the repair cost, and how much is the selling cost after. Like, I mean, you have to check the property exactly if it's a fix and flip property or no. Like, a lot of people would make money first in real estate from fix and flip because it's easier than other actually kind of investment in real estate, but you have to be very expert on it. Like, I recommend if you want to start fix and flip, you have to first find a contractor who are good in fix and flip, and then after you learn this stuff, you learn how to make a contract with contractor, how you actually estimate the cost, how you estimate the selling price. After you actually did that a couple of times, you do it yourself because it's very much tricky, and if you can do it right, you would lose money instead of gaining money. The other investment which is good in real estate is wholesaling. There are a lot of friends, I got a lot of friends that they do wholesaling. The wholesaling concept doesn't require a lot of money, but it needs a lot of expertise. Wholesaling concept is the concept that you go out, you find a motivated seller, and you actually make a contract with them, and after you put that property in a Facebook group for wholesaling, or you actually put it and advertise for it in a specific criteria, specific market, and you sell that property with good amount of profit. For example, my friend, he actually did 100 deals last year. What he actually did a lot of advertisement in newspaper, at TV, and a lot of other places, and he would find a motivated seller. He would make that on the contract. Once he bought that and he had that contract, which usually the contract is 45 days or 30 days, in that period of time, he would look for the buyer. For example, he bought one property in Toronto for amount of $700,000. The seller was very much motivated, and he made it on the contract, and after he put it on Facebook group to sell it. At that time, he sold that property, if I don't make a mistake, for $730,000, and he made $30,000 by assigning the contract from the seller to the buyer. And that's how people are making money in wholesaling, and you don't need that much money to do that. It's very easy to do if you're an expert at it, and all you have to do is have a right contract, right seller, and right buyer to actually do that. There are a lot of other terms in actually real estate that you can make money that require more money. In real estate that you can make money, that require more money. It's like development is one of them. In development, you need a lot of money to buy the land or get the permit and do a lot of stuff for it. But after you grow, after your money actually grows, after you make money from fix and flip, wholesaling, Airbnb, and rental, you can go and do development. You can do the land and do the severance, and you can do a lot of other investment in real estate that gives you more return. So to actually have a conclusion is, there is not just one way to make money in real estate. You have to find your own way. You have to find your own area that you're comfortable at. And after you find that area, you have to find a way that it's actually more comfortable for you to make the money. You can be good at rental property or the depreciation part, which is commercial and other property. The other field that you can actually invest in real estate is multifamily house. Multifamily house is the houses that has different units. You can buy those multifamily, you can rent out the units, and you can make money out of it. The main important part in multifamily home is net operating income. The net operating income is the main point that you can recognize if the multifamily house is good to invest or it's not a right property to invest. So I myself don't enter to multifamily unless I have enough experience in residential, because multifamily is a different game. If you want to enter to that game, you have to know exactly what's going on. You have to know what is the net operating income. You have to know how to deal with tenant. You have to have a management fee and somebody to actually take care of the rentals for you, because it's such a headache if you have 10, 20 multifamily home. So I recommend the multifamily if you have more experience and you're actually more comfortable with investment in real estate, and at that point I recommend multifamily. But before that, I really don't recommend a multifamily. To actually conclude, to have a conclusion, I recommend that you actually get the experience in each different field. See which field you're comfortable at, try that field, and don't go big first. Go start with something small, and after you actually did a couple of like 3 or 4 properties, you enter to the game. The thing is, some people, when they invest in real estate, they don't think about the tax. The tax requirement and regulation is very important. If you can write off the property that you buy, if you can depreciate that property, if you can actually write off that depreciation from your tax, you actually don't make any money in real estate. So it's very important to know that when you make money out of real estate and you sell the property, you can invest that money in different real estate, different property, without even requiring to pay any taxes. And I'm going to actually talk about those in different videos that we have later on. Hope to see you soon.